Welcome traders, my name is Tomasz Wiśniewski, I'm a chief analyst in Alpari Research and Analysis, and welcome on a daily analytical report with Alpari. What do I have for you today? Well, yesterday we spoke about around 10 instruments, but I have a little bit more for this week. I have a little bit more instruments prepared for you for the next 3 days. So we will check out the situation on some new instruments. I would like to say something from the fundamental point of view, but again, as always, as usual, there is nothing to say in the week between Christmas and New Year's Eve. But if you do not believe me, look by yourself on the calendar. As you can see, well, Wednesday we had a bit of data from Japan. We had retail trade, which came better than expected. We had industrial production, which came a little bit worse than expected because it's not written here, but around 2% was expected. But it's still quite a good number. We can see that Japanese economy is rising, maybe not so fast as Prime Minister Shinzo Abe would like to see that, but still it can be seen in numbers. We still have in 3 hours we'll find out data for the housing market in United States. Apart from that, nothing is going to happen today from the fundamental point of view. Let me start with Brent oil. We usually were talking about WTI, about West Texas Intermediate, but this time let me show you Brent. Brent went above 53.4 dollars per barrel, resistance at the beginning of December. After that, the price created head and shoulder formation, but also together with head and shoulder formation, you should always almost always draw a line connecting top of the head and top of the right shoulder, because in many occasions what seems to be a head and shoulder formation, in reality it's just a pennant. That's what happened on the oil now. You can see that instead of a reversal, what we are seeing here is just a trend continuation. Bullish trend started here in the middle of November. Well, midterm bullish trend started here with an upswing, correction, upswing, correction, and now we're ready for another upswing, maybe aiming $60 per barrel. It looks more probable that the price will continue to go up, then it will fall below this support highlighted with yellow color on 53.4.5, around this level. Also, I would like to show you Nasdaq. Nasdaq looks a bit better than other indexes. Why is that? Because here we have a clear support, clear horizontal support. First one is here. On 4,920 points. Second one is here on psychological barrier of 4,900 points. Since the middle of December, when the volatility dropped, what we're seeing here is a rectangle. Typical side trend closed in a rectangle formation. Rectangles are usually a trend continuation patterns. So if the rectangle was created after an upswing, we should see further upswing. Today, well, actually yesterday, we made first attempt for another leg up because we had a bullish breakout here. Then we tested the recent resistance as a closest support. This test was positive and now the price is aiming higher. From the technical point of view, it looks like this trend will be continued. Everything looks right. Broken resistance became a support, trend continuation pattern, a trend itself. So those mentioned factors here are supporting the bullish view on Nasdaq and also on other indexes. Okay, now those new currencies that I told you we're gonna look at. Here is American dollar to Mexican peso, which was a hero during American elections. Many traders were looking towards Mexican peso. Obviously, we know why, because of comments from Donald Trump. What we are seeing here is an upswing caused by elections, a bit of correction, upswing again, and then reversal. We do have a correction. Correction is inside the rectangle. Trend is bullish, as you can see here. So a rectangle in a bullish trend should result in trend continuation. If the trend is bullish, we should see this pair aiming higher in the next few weeks. Why weeks, not days? Because it's a long-term chart. We cannot definitely say that we will have a bullish breakout here, maybe today or tomorrow, because we have no signs for that whatsoever. But if we will get all of the factors here, bullish scenario is more probable. Okay, another instrument I would like to show you is Euro to New Zealand dollar. New Zealand dollar together with Euro or American dollar, etc., is very, very popular with correction equality patterns. So New Zealand dollar, most of the corrections have the same not length but depth, are the same in terms of depth. Look at those two corrections, they're exactly the same. 740 pips. This one is also 740 pips. You cannot just make that up. So I was thinking that maybe we'll see another correction equality, but on the way to do that, we have a trend line. 1, 2, 3 points, now 4. So as you can see, the price bounced straight away from this resistance created by a trend line. What we are also seeing here is a head and shoulder pattern. Left shoulder, head, right shoulder. We got a breakout of a neckline. So we cannot say it will be a pennant anymore because it's a head and shoulder and it's already happening. What we are having here is a short-term support created by the top from 19th and 20th of December and a support from the end of 21st of December. Price stopped here for a while, but there are high chances that we'll have a breakout here. Why? we don't have a trend, we don't have a correction equality pattern, but what we have here is a trend line and a very strong reaction on this trend line, which can be seen today. So with this kind of a bounce, we can expect a further decline here on this instrument. Another one is Canadian dollar to Japanese yen, where on a daily chart we touched very important resistance on 88.8. There is a kind of head and shoulder formation, left shoulder, head, right shoulder, but there is no breakout yet. Even if there was a breakout, I don't think it would be significant because of the low volatility and liquidity which is happening now on the market. But before breaking the neckline, price is having a side trend closed in a rectangle. Before making any decision on this instrument, it will be wise to wait for a breakout here. Another instrument with Canadian dollar is Canadian dollar to Swiss franc. Let's start maybe from here because, well, we do have a downswing, and in the long term we are just having a side trend. But starting from here, we have an uptrend, then there is a flag which is trend continuation pattern, and we got a bullish breakout, right? Bullish breakout broke one resistance, but couldn't break another one, the horizontal resistance created by tops from December 2015 and from April 2016. The price draw beautiful, very beautiful shooting star here on a daily chart, and as you can see, after creating the shooting star, the price wasn't higher, so that was a very good trading signal, trading opportunity from 12th of December. Unfortunately, we couldn't use that, but nice to know that this price is behaving like that. So this can be considered as a false breakout. After false breakout, what we should see is a strong decline, and that's what we're having. They were unable to break this resistance on 0.773, but also unable to hold above 0.7610 support. They went lower, they couldn't defend it. So actually this is a false breakout, but this can be called a false breakout again. So from this point, the price can decline and should decline. And look at that. That wouldn't be a surprise because we are exactly at the top of the range of the recent trading. If you're in a side trend and you believe the side trend will be continued, what you're doing is selling on a resistance and buying on a support. Simple as that. And that looks like a plan for Canadian dollar and Swiss franc. Another pair which I have for you is Australian dollar to Swiss franc. So we had two Canadian dollars in a row. Now we're gonna have two Swiss francs in a row. What we're having here is a downtrend. First correction, downswing. Second correction, downswing. And now we're having a third correction, which is shaped as a wedge. So everything is right. Wedge is under 38.2 Fibonacci level, so everything is alright. We had a bounce from the upper line of the wedge and 38.2 Fibonacci level. Now we're bouncing from the lower line of the wedge. But, there are higher chances that this lower line of the wedge will be broken. And if so, we will aim this 0.72 0.7240 support. Maybe it's not the best trading occasion in terms of risk to reward ratio. On this webinar, I will show you much better, but it's still alright, still can be significant for some of you, especially if you consider kind of a short-term situation, this resistance here, that if you go tight with your stop loss, like for example here, 30 pips, 140 are seems reasonable now. So, 2 Canadian dollars, 2 Swiss francs, now 2 Australian dollars. What I was having here was a rectangle below a support, and actually I believed that we will have a bearish breakout from this rectangle, but not. We had a bullish breakout, right? But this can be great selling opportunity. Not yet, but if the price will come back to this rectangle, this will be just a false breakout. And on a daily chart, it would be a beautiful shooting star, right? So that would create a perfect selling opportunity. Because on my analysis, you saw plenty of shooting stars, plenty of false breakouts, and I do know that you do know that they work, right? False breakouts. And if the false breakout is created with a shooting star, that's even better. Right, so that can be, this bullish breakout can actually be a nice sell signal. But for that, we need to wait till the end of today and see if the price will close above or below this support. If the price will close above, there still will be a hope for buyers. If the price will close below, I think the buyers are screwed, and we will see a downswing here. Canadian dollar now. Now to Canadian dollars in a row. What we're having here is a downswing, then correction, and I told you that the price is aiming 50% retracement. Also, these are tops from November. In theory, as long as we stay between blue lines, the sentiment in the long term should be negative because it's only a flag, so only a trend continuation pattern for this downswing. But already this flag is much longer than the downswing itself, which creates an opportunity for buyers to actually create a channel up formation and a new trend. Obviously, buyers climb the stairs and bulls climb the stairs and bears take the elevator down. That's why the downswing is much shorter than the upswing, but still this correction is a little bit too long. The last chance for sellers here is now, as the price close to 50% Fibonacci also to the top of this correction. If we will see a retracement here, that will be a positive sign for sellers. But if not, if the price will break 50%, I think sellers should abandon their view and close their positions. New Zealand dollar to Japanese yen. What I'm saying here is long term. Support 2014. Support 2015 in February. After breakout, resistance in July 2015 and November, December 2015. And now we are aiming this level for the first time. We are on the yearly highs. And the test is very negative. The test created a shooting star. A shooting star was followed by a nice bearish candlestick. And now we're having a correction which creates a chance for opening a short position along with this signal on weekly chart with slightly better prices. So you're not opening this short position here, but 100 pips higher, which I would say is pretty. So to sum up, on a weekly chart, we have a shooting star on a horizontal resistance, which creates a sell signal, which traders already followed, but I don't think it's the end of that, right? They already, after the shooting star, they already went 150 pips lower, but I think there's still potential for more. And we're coming back to the instruments from yesterday, euro to British pound, euro to sterling. What we're having here is a defense of this long-term support. After the breakout, the price is making ascending triangle. Ascending triangles in uptrends are buy signals. So in theory, what we should see here is a breakout of this horizontal resistance, and the price should be aiming higher. Euro to Canadian dollar. Here also there is a chance for a false breakout. Actually, on the hourly chart, we had a rectangle. Yes, in the short term, it was a rectangle created by after the upswing. So in theory, we should expect an upswing here. But on a daily chart, it was still a rectangle on the resistance. This rectangle on the resistance created a bullish breakout, but this can be retraced. What we are seeing here, what we can see here, is the price will go ten pips lower. What we're gonna see here is bearish engulfing, which when present on the horizontal resistance, it's a sell signal. So 10 pips lower, if the price will manage to close 10 pips lower, what we're gonna see here is a bearish engulfing. So we'll have a sell signal on euro to Canadian dollar. Let's see euro to American dollar. That was a strange session really for euro today, because in the morning was very optimistic. So as you can see, the price broke recent resistances, right? Went higher, set new midterm highs, but after that it was all gone. And on euro dollar, we tested 1.048 resistance. It was defended by sellers, and the price started to go down. Actually, broke lows from yesterday, from 2 days ago, 3 days ago, 4 days ago, and is aiming higher. So here I was asking you if you can see a double bottom here or two flags. Well, two trend continuation patterns, so actually a flag here. Then after the breakout here, we said that it must be a flag. The price was having a side trend, and now we're lower than in this time when we are talking about this formation. And we said that it looks more like a flag, and actually the price is now aiming lower, so good for Alpari team. Euro to Australian dollar. We are still under the influence of this false breakout here, or false breakout of this horizontal support. I really thought that the price will continue to go down, but as we can see, it's not. The price is aiming higher. but met trend line here. Maybe we can also extend this line here. So we are aiming the trend line where we can possibly see a retracement, but it's too early to say if we will see it or not. Australian dollar to American dollar, everything is alright. Downtrend, wedge, downtrend, breakout of one support, here, breakout, and aiming for another support. That was our scenario, that was our plan, that we are tweeting, writing articles to many portals, and that's what's happening. So that was a very good technical occasion. As we said, we tweeted about that, we were sending analysis on different portals, but we also included that setup in our newsletters, which we provide to clients in Nigeria. Another instrument is Euro to Japanese yen. When I spotted this correction equality movements, but so far it's too early to open short position. I would think about opening position, a short position only after the bearish breakout of this yellow line connecting recent short-term higher lows. It can also be considered as a neckline of this head and shoulder formation, but it's up to you. How will we call this name, this line? It doesn't really matter, because all you need to focus is if you will see a breakout here or not. Cable aiming for new lows after downtrend flag, breakout of the lower line of the flag of this horizontal supports, and then downtrend again. Lately we stopped in the rectangle formation. There are higher chances that we will see a downswing from this, and actually we are seeing a bearish breakout right now, and what you can still get here is 120 pips. And those will be the lows from October here, and chances that the price will get there are really high, in my opinion. New Zealand dollar to American dollar, very similar situation to cable, but here we had a try of a bullish correction here. It would be perfect if we would get here 60 pips higher from the top 40, but we can see that the buyers have no power here. Demand is rather low, so it looks like the price will continue with the trend, and trend is obviously bearish. Well, it's always nice to continue the trend, right? And gold was having those trend continuation patterns, then a pennant, which didn't result in a trend continuation, but in a trend reversal, surprisingly. But the most important thing here was a breakout of this trend line connecting recent lower highs. And after the breakout, we used this trend line as a support, and now the price is above. I wouldn't say it's a perfect breakout. I wouldn't say it's sustainable. It doesn't look strong. Unfortunately, I would love it to be strong, but it's not. So I would say that opening long positions now are a bit too early. And silver is fighting on this horizontal support. They tried to break it, they didn't manage, and now they try to break it again. Everything everything happens here with low liquidity, low volatility. Maybe we'll have a final decision once traders will come back to the market. So far, it seems like they're on holidays. Okay guys, thanks very much for watching Daily Analytical Report. I hope you enjoy those many occasions really that we spotted for you on the market. Remember to follow us on Twitter where we post our ideas and on our website alpari.news. Thanks very much and goodbye.